Good morning, members. This is a special meeting of the panel on financial affairs. Actually, this is to make up for the December meeting that we did not hold. Now, we have quite a heavy agenda today. First, for the first 2 hours, those are items to do with the Financial Secretary. First item, briefing by the Financial Secretary on Hong Kong's latest overall economic situation. Can we invite the administration to join us, please? Good morning, colleagues from the administration. Welcome, Financial Secretary and his team. We also have the government economist, Mrs. Helen Chan, with us. Item 1 on the agenda. It is a briefing by the Financial Secretary and Mrs. Helen Chan on Hong Kong's latest overall economic situation. Financial Secretary, please. Good morning, Mr. Chairman. Good morning, members. I would like to brief you on Hong Kong's latest economic situation. In the past year, the global economy has been improving and there are a decreasing risk of a downward trend. Overall, the economic sentiment is good. For the macro condition, it is good, and so it's helped to propel growth in our export. In the first quarter, our export of goods has been doing well. There's an increase of 5.5%. For October and November, export value has recorded a steady increase, a 7.3% growth year on year. And then for export of services, there's also increased 3.7%. Tourism exports, services export, there's an increase of 1.8%, the bucking of the trend. And quarter 4, we continue to see a rebound in tourism. And visitor numbers has gone up by 6%. Last year, 55 million visitors came to Hong Kong, an increase of 3.2% compared to 2016. So we're definitely, we've now reversed the trend. Now, with some good economy on the mainland and also with some general increase in income, consumer sentiment has been good. In the third quarter, private consumption has recorded robust growth of 6.7%. In October, retail sales got up by 6.9% year on year. With improvement in the economy for the first 3 quarters, there's economic growth of 3.7%. Many surveys show that businesses have a positive outlook of the economy. And last year, from September to November, unemployment rate is 3%, is a low in recent years, and there's been a real increase in wage. August to October, the average income of employees is 5.4%. The discounting inflation, there's a real growth of 3.5%. Well, with some robust external demand and solid growth internally, in the first 3 quarters last year, there's a total increase of 3.9%. And in fourth quarter, we see steady expansion. So for 2017, we could reach the estimate of 3.7% in growth. That's a relatively fast growth rate in recent years. And in the past decade, the average growth rate has been 2.9%, so this is an increase of 1% almost. And inflation, that's under control. For the first 11 months of last year, inflation was on average 1.7%. That shows that there is modest growth, increase only in costs. In 2017, we expect inflation to remain at 1.7%, a 6-year decrease over 6 continuous years. The IMF forecast that for this year, the global economic growth will be 3.7%, which is slightly higher than the 3.6% last year. For the U.S., economies continue to steady. The tax reform has been endorsed by the Parliament last year, so it's expected that the momentum could be maintained in the coming year. But we must note the uncertainties in the financial and other policies in the States, and also the impact of tax reform. For European Union, the economy has been performing better last year than previous years. And for Brexit negotiations, there's been progress. So there's now a steady expansion of the economy in the EU zone also. Mainland economy has also been growing steadily. For the first 3 quarters of last year, economic growth has increased to 6.9%. For 2017, economic growth would probably exceed the 6.5% target set at the beginning of the year. The mainland is deepening its structural reform. It's putting strict control on financial risks. It's also using technology to drive the growth of the economy. There is a continuous structural reform transformation to consumption-led economy. In 2018, it's expected there could be medium to high growth rate. Japan also, there's been relative improvement with strong export. In the 3rd quarter last year, the growth has been 2.1% and sentiments are positive. For the emerging economies in Asia, in general, the economies are doing well. As for ASEAN countries, also last year there's been steady growth. Yes, for global economy, that's an upward trend, but we must still stay alert to possible uncertainties. Now, with economic recovery in advanced economies, the monetary situation could be even more complicated. Last October, the Federal Reserve started scaling back its balance sheet, and it's also increased the interest rate, and is expected to increase interest rates 3 times in the coming year. And also they are scaling back, the ECB is also scaling back the procurement of assets. Now, if central banks reduce their effort in economic expansion or quantitative easing, then it could affect the whole global situation. And also there are geopolitical tensions, and also protectionist sentiment is on the rise. So this could all lead to uncertainties in the economy, and they may affect the local asset market. So investors must take note of the possible risks. And otherwise, we have positive sentiments, and there's good employment situation, and with some continuation of various infrastructure projects that will provide support to economic growth. And also the mainland's economy is doing well, so it will be a benefit for our export. For this year, we need to watch geopolitical tensions, interest rate hikes, and so on. Now, because there is a moderate inflation, so there's a low imported inflation. And in the near term, we do not expect much inflationary pressure. But if the economy growing continuously, there is possible that the inflation pressure would be increased. So the government will pay close attention to the global and local economic situation. In the budget next year, the government will announce the economic growth forecast and inflation forecast for 2018. For the property market, in May, the Hong Kong Monetary Authority launched the 8th round of prudent control measures. And also the U.S. Federal Reserve increased interest rate twice, so the sentiments become more cautionary in nature. The sentiment has become more cautious, and there is a deflation of a price of 0.5%. compared to 1.5% increase in the same period last year. And also transaction volumes dropped to 4,400 cases a month. But then we see in recent weeks the property market has gathered pace again. For the fourth quarter, the average number of transactions went up to 5,400 cases again. So for several years of steep increase in property prices, for the property prices last November compared to the peak in 1997, that's gone up by 101%. Home purchase affordability further worsens to around 68%, which is significantly higher than the long-term average of 45% over 1997 to 2016. Interest now property prices exceeds the affordability of the general public. If interest rates should go up, that would add to the burden of those paying mortgages. So this is a worrying trend. Now, the property market may be vibrant at the moment, but their fundamentals in the property market has changed, so people must note that. First of all, interest rates in the U.S. have gone up 5 times by 125 points. And with the linked exchange rate, Hong Kong will have to follow the U.S. in increasing interest rates. Also, in the past few years, the government kept increasing the supply of housing land, and with the completion of flats, the imbalance of demand and supply would eventually be addressed. So by increasing land supply to increase housing units, that is the primary measure taken by the government to stabilize the property market. In 2017, there are 24,300 units that could be produced, which exceeds the target of 18,000 by 3.5%. With the continuous effort of government in the next 3 to 4 years, the potential supply of new flats would remain at a high level. We forecast that to be 97,000 units. And at the beginning of last year, the government has done an estimate on projects to be commenced or planned to be commenced. In 2017 to 2021, there will be 20,300 units completed per year. So compared to the previous 5-year cycle, that's an increase of some 70% on average. We have confidence that for the supply of private units, especially small to medium-sized units, that will be increased steadily over the next few years, and that may put pressure to bear on the property market. So when making a decision to buy a property, the public must bear in mind all the risks, especially they have to assess the impact of interest rate hike on the mortgage affordability. Now, even though the economy is doing well, but we must not let down our guard, because there are various uncertainties in terms of external factors, and that may have an impact on our economy. So the government will continue to pay close attention to the developments. We will make sure that we have stable employment here in Hong Kong. Now I'll invite the government economist to briefly report on the latest overall economic situation and our forecast. Thank you. And then I will take questions from you. Thank you.
Mrs. Chan. Thank you, Chairman. Chairman, members, good morning. I will now use a PowerPoint presentation to walk you through Hong Kong's recent economic situation. And in the third quarter 2017, the overall GDP growth in Hong Kong was 3.6%. As you can see, the red line, it was also the fourth straight quarter of above trend economic expansion. When we look at the Q4 figures in October and November, the external trade was still growing strong, and tourism also improved. In the fourth quarter, the number of tourists, the tourist growth sped up to 6%, and meanwhile, internal or domestic demand was also strong, as you can see from the strong retail performance, and the 6.9 growth was a satisfactory growth as we can also expect strong growth in Q4. The labor market remained in a state of full employment. In the beginning of the year, unemployment rate had been dropping to a level of 3%, which was a low in the last 20 years. With a rosy economy, the employment situation was also strong, and inflation pressure was also largely contained. As you see from this chart, inflation fell for 6 straight years. For the first 11 months of last year, the average inflation was 1.7%, which was a very low level. Meanwhile, incomes generally sustained gains in real terms. This table includes different indices, including index of payroll, wage index, median monthly household income, and the average monthly employment earnings of full-time employees of the lowest decile group. And the real growth of these indices have been satisfactory, ranging from 1.5 to 3.5%. The number of low-income households hovered at a relatively low level, and these encourage employment and income growth. When we look at the latest figures, according to forecasts released in November last year, the real GDP growth would be 3.7%, and we have no difficulty achieving such forecasts. And in terms of the property market, in May last year, the HKMA released the 8th round of macro prudential measures, and there was also a 5th interest rate hike, and the sentiments were relatively cautious, and the number of transactions also eased. When you look at these two charts, the property prices began to pick up again, and the property market has become exuberant again. And in November, the figure increased to 1.1%, and the average number of transactions reached 5.4 thousand, which was near the long-term average, and it rebounded from the 4,400 in the previous quarter. And the mortgage payment to income ratio rose further. It increased to 68% in Q3 last year, higher than the 20-year average. If the interest rate increases by 300 points to a more ordinary level, the ratio would further increase to 88%, which was higher than the 1997 average. So the risk of a bubble remain. In recent years, we have constantly increased the amounts of land for housing, and the total medium-term flat supply stayed at a high level of 97,000 units. In the next 5 years, as the Financial Secretary already said, the number of units available will rebound to about 20.3 thousand units. So we can expect an increase in residential supply in the next few years, and the shortage of flats would be reversed. And in terms of interest rates, the U.S. has raised interest rates for 5 times, and interest rates in Hong Kong would also be adjusted upwards, and this would lead to pressure. Compared with the peak in 1997, the current property prices have almost doubled. So we have to keep tabs on the risk with the property market. In terms of the economic outlook for 2018, are we able to sustain the growth in 2017? Hong Kong is a small outward-facing economy. So going forward, we will have to look at the external situation. As the biggest economy, the U.S. has been doing well. Together with the tax reform package, there would be further stimulus to the economy. So we can see that the benign trend from last year will be extended to this year. A strong U.S. economy would lead to a stronger likelihood for interest rate hikes. The Fed expects 3 interest rate hikes this year. And with rosy GDP forecasts, the interest rate hikes might take place at a faster pace. And the Eurozone has been doing well, and with the pressure of Brexit easing, the overall pressure has eased, and the ECB has reduced its asset purchases, which is a new milestone. And we have seen quantitative easing in recent years, and now the trend is receding. The mainland continue to sustain medium-high speed growth in its economy, and last year the growth was 6.9%, which was for Q1 to Q3, which was higher than the 6.5% expected. And the IMF has raised the forecast for the mainland economic growth to 6.5% for 2018, and in 2018 the overall global climate has improved. Private sector analysts expect Hong Kong's economy to see moderate growth in 2018, and there have been constant upward adjustments in the forecast. The latest forecast is 2.7%. The figures we quoted have been very positive, both domestically and externally. And however, we have to stay vigilant to the risks and uncertainties. For instance, whether the U.S. interest rates hikes will lead to a change in the direction of capital flows, and whether there will be any impacts on the economies or the flow of capital, and whether big corporations will change their global investment strategy. So these are some of the uncertainties. And there might also be fluctuations to the global market this year, and other central banks have begun to withdraw their stimuli, and this might lead to greater volatilities in the financial markets. And there's also a possible rise in the protectionist sentiment, and under this Trump administration, they recently mentioned that the mainland is one of the U.S.'s trade competitors. So there are certain policy risks. And we also see heightened geopolitical tensions in various regions. So that's all for my presentation. Thank you very much, Mrs. Chen. Members waiting to speak, we have 6, including Loy Kok, Siu Ka-fai, Dennis Kwok, Jeffrey Lam, and Starry Lee, as well as Mr. Oden Chow. Mr. Jeffrey Lam, would you like to speak? Well, I raised my hand before them. This is certainly not the case, as I saw. I saw when they raised their hands. When did you enter the room? The 3 other members arrived before you. I know what time you arrived. I was here at 8:50 a.m. Would you like to go first? I'm just saying that I put my hands up before them. If you did not notice, that's fine. They raise their hands after they enter the room. Would you like to go first because you have another meeting to catch? I think we are rather flexible. If that's possible, yes. I do have another meeting to catch. Mr. Loy Kwok. Mr. Ronald Chan, would you mind allowing Mr. Lam to go first? Mr. Lam would go second. Mr. Loy Kwok, you have 4 minutes. Chairman, thank you. I have 3 questions. On the unemployment rate, it has remained at a low level and there has been full employment, which is great to see. But there are 2 sides of the coin. Low unemployment is largely due to population aging and a lack of and a shortage of labor. And our long-term competitiveness has become questionable. And the paper talked about the number of low-income households, the number of or the population above 65 years old has comprised 12% of the total, and we can see the impacts of population aging. The tax reductions in the U.S. Are mirrored in other economies or countries, and they want to encourage multinational corporations to step up their activities in the United States, and they also want to appeal to foreign investment. Facing the tax cuts in the U.S., Hong Kong would be affected. And this is related to item 2 on the agenda, and we should have a joint discussion. They both have to do with the budget. In terms of the property prices, as the Financial Secretary said, we can maintain our target for first-hand supply, and the unit prices for residential units have hit a new high, and 60,000 in North Point and 20,000 in Yuen Long, and the first-hand residential property market has suffered due to the property curbs, and with enthusiastic buyers, we are not able to dampen the market, and this would lead to a host of other problems. The second-hand market might provide a lot of starter units, but with mortgage and other issues, the BPA has raised its concerns on different occasions. Financial Secretary, thank you very much. As for the low unemployment, what Mr. Low said was not correct. The government has been working hard to ease this problem. On one hand, we are encouraging employment in women, and we are encouraging family-friendly employment practices, and we are working very hard on this front. And from the statistics, we can see that labor participation among women have been rising, and we also encourage the use of innovative technology to enhance productivity, and this would relax the demand on labor. And at the Innovation and Technology Bureau, there are policies including support towards SMEs. And thirdly, we would import labor without affecting the wages of local workers. As for the tax reductions in the U.S., we feel that Hong Kong's existing tax regime is competitive, and we have recently introduced a 2-tiered system. For the first 2 million, the tax rate would be just 50%. and we are monitoring the tax policy in the U.S. and its impacts on other countries. In terms of property prices, we are keeping tabs on the market. As for the second-hand market, we are monitoring the situation as well. And when the LegCo scrutinized the stamp duty bill, we talked about allowing buyers who would like to swap properties a longer time so that they have enough time to identify the right flat in the market. And the government has accepted amendments on these.
Mr. Jeffrey Lam. Thank you, Mr. Chairman. First of all, I keenly look forward to some good news in the upcoming budget. I'm not saying that you should just dish out goodies. It's about how we could improve the economy in Hong Kong so there could be better development of businesses. Now, the government economist mentioned just now, last year the economy did well, and there was high real-term economic growth. But what about this year? I have reservations because there are so many changes around the world, so much happening. Now, the tax reform in the States has been passed. What would be the possible impact? It's possible that large amount of U.S. capital overseas would be taken back to the U.S. So how would that impact other economies? We do not know yet. And I'd like to thank the Financial Secretary for promising to pay close attention to developments. Now, I suggested lowering tax at the tax summit, but then you said it may not yet be the appropriate time, but I hope you keep an open mind. You know, we mustn't just do our own things with regards to others. If there are changes in other places, we have to consider how we could attract people to come and do business here. So we have expectation of the budget. Because I think the surplus is going to exceed $100 billion. Well, you've been hinting recently that the surplus would be high, would be large. Now, of course, we need to be prudent in managing public finances, but we must spend where spending is due. So I hope you would bear that in mind in your budget. Now, in Hong Kong, our biggest concern is about land supply and property prices. I don't know why. Maybe Hong Kong people can take harsh measures really well. The harsher the measures, the higher property prices go. So you can see these so-called demand-side management measures or harsh measures, they kind of really help people to buy their first homes. Now, the government economist said in the coming year there could be at least 3 rounds of interest rate hikes. So how do we help people to buy their first homes? I think you need to provide more land. Or you may need to change your policy on greenfield site and brownfield sites, for instance. So can I ask the Financial Secretary what measures are up your sleeves to deal with the property issue? Financial Secretary? Thank you, Mr. Jeffrey Lam, for your questions. Well, on the tax issue, yes, Mr. Jeffrey Lam, the Liberal Party and the BPA have all asked that the government adjust downwards the standard profit tax rate. Now, the answer I gave was at the time that our tax rates remain competitive unless there are major changes around the world. Otherwise, I would not casually lower the standard tax rates in a particular year. That remains our position. But as Mr. Lam said, we also keep an open mind. We'll see what the competition is. Now, that's the first point. Second point, even though we do not plan to change the standard tax rates, but on policy initiatives, on providing tax concessions, yes, we will consider them. On property prices and land supply, well, we had no choice but to introduce the harsh measures at the time because of the imbalance in supply and demand. So on the one hand, we wanted to curb speculation. That's why we brought in the harsh measures. At the same time, we need to increase supply, both land and housing supply. I agree with Mr. Lam. The only way to address the problem is about increasing supply. Now, as you know, after the chief executive took office, she set up a task force. The task force has held many meetings in the past few months. I understand that in March or April there may be proposals put forward for public consultation. It's hoped then after some discussion we could form a mainstream view and we could make a breakthrough in terms of supply. So we could keep increasing supply, both private and public housing supply, and then we could address the housing issue. Thank you. Next, Mr. Ronick Chan. Thank you, Mr. Chairman. Since Mr. Chan became the Financial Secretary, our economy and our fiscal reserve have been improving. So you bring good fortune to your post. So I hope this will continue. And just now, the government economist mentioned interest rate hike in the U.S. and also the tax reform in the U.S. and that may have a negative impact on the affordability ratio in the property market here. But then at the same time, the US dollar remains weak in the past few months. Now, the Hong Kong dollar is linked to the US dollar, and that would actually provide support to asset price increase and curbing of inflation pressure. So the two, if they offset each other, or will they offset each other, or which factor will prevail of the two? And we also told that the global economy has been doing relatively well. Hong Kong's economy is, of course, very much affected by the mainland economy and is increasingly so. So how could we seize upon the developments of the mainland so we could maintain medium to high growth rate of our economy and growth rate also in the employment market? Financial Secretary. Thank you, Mr. Chan, for your question. On U.S. interest rate hike, as I mentioned in the opening remarks, since there's been an interest rate increase of 125 points so far in the U.S., now Hong Kong has a linked exchange rate, but because we have a relatively adequate capital, that's why our interest rates haven't gone up yet. But in the past few months, you can see that apart from the seasonal demands, there is increasing pressure of interest rates having to be increased. So with continuous interest rate hike in the U.S., if you study the meeting minutes of the U.S. Federal Reserve and if you study various commentaries, we expect the interest rates to be increased three times in the U.S. in the coming year. And then it's inevitable that our interest rates may also go up. But of course, how much the increase will depend on our capital market. For example, recently there's been an inflight of capital, and that's helped to bring down the HIBOR rate. But then there are many uncertainties. And for tax reform in the U.S., well, in the past, for U.S. companies making a profit overseas, if they don't bring the money back to the U.S., they don't need to pay tax. And that's the key reform. Now is that a line will be drawn. So for profit made overseas before a certain time, whether you take that back to the U.S. or not, the the profits will be taxed, and companies will have to pay the tax over several years, and we talk about a large sum of money because overseas companies may have made the U.S. companies may have made profits overseas cumulatively for a long time, so that's why we expect U.S. companies may have to take some of the money back to the U.S. And after that, when U.S. companies make profits overseas, they no longer have to pay tax for that. So how would that affect the investment decisions of U.S. corporations? We have yet to assess that, because at the same time we see there's overall reduction of tax rate in the U.S. Now, for countries with close trading relationships with the U.S., with these countries also adjust their tax rates, we don't know yet. That's why we are following very closely the developments. But what we would like to remind the public is that in the coming year, it's almost inevitable that there will be interest rate hikes. From our past experience and from looking at the current asset price level, we believe Hong Kong's interest rates will follow the trend of that of the U.S. rate. Of course, the range would be subject to various factors.
Mr. Dennis Kwok, Chairman, I think you realize that a recent flat in North Point was sold for more than $60,000 per foot, which was certainly unaffordable, especially for young people. But when you look at the figures, the medium-term supply for residential flats have reached a new high in recent years. But even with a high level of supply, we do not see how the property prices would come down. So would the government have any proactive measures to help our young people, say those below the age of 35, in order for them to purchase starter homes and for them to afford the down payment? Many young people can pay the mortgage, but they cannot afford the down payment. So what should be done? I'm one of the directors of the Hong Kong Mortgage Corporation. So what can HKMC do to help young people? Obviously, the government failed to suppress the property prices in the short, medium, and long run. We need to do something to allow our young people to have a property of their own. Thank you very much. Mr. Paul Chan, thank you very much for the question. Chairman, I would like to correct one of the figures I gave in my speech. And the land supply in 2017 to 18 for private land, the number of units is 24.3 thousand. It was 35% higher than the 18,000 target. I said 3.5%. The correct increase should be 35%. So it was a slip of tongue. As for the difficulties endured by young people in buying their homes or paying the down payment, I totally understand their situation. You talked about helping young people purchase homes. Given the existing prices, the flats are certainly unaffordable. The government should work on subsidized sale flats. Apart from HOS units in the policy address, the Chief Executive talked about starter homes. And for details, the Transport and Housing Bureau would offer more details to LegCo and the public when the time is ripe. Starter homes would offer much greater discounts compared with market prices, and with the help of the Hong Kong Mortgage Corporation, buyers can pay a lower down payment, and this is certainly something we can look at. As for the private housing market, you said that many people are able to pay the mortgage but not the down payment. I think this has been mentioned by members from different political camps, and this is something we realize as well. And as we said, the current property prices are ultra high, and we expect the interest rates to increase in the future. And eventually the property market would be influenced. So we would offer help to the more marginal buyers. Well, if we make such move, they would be hard hit if there are changes in the property market, and this is our concern. Chairman, when we talk about future supply for pre-sold units or pre-sold first-hand markets, there would be 97,000 units, and the pre-sold units can somewhat satisfy some of the supply for potential buyers, and buyers now have more options compared with a few years ago. However, the housing needs cannot be tackled immediately. In order to tackle the housing demand, we have to look at the number of completed flats. In the last 5 years, the average number of new units was about 11.7 thousand per year. And there's a gap with the average number over the past 5 years. So there is an accumulated demand. Even given the relatively high number of new flats last year and this year at 14 or 15,000, when we look at figures from relevant departments with a relatively high private land supply in recent years. So since last year, a large number of pre-sold units was sold, and the number of new flats is also high. Next year, there will be 20,000, and 2 years later, 21,000. And when these units are completed, the market would look different, and the buyers would have to move in, or else they would rent out the units. So the supply situation would be more logical. And some people might wonder why the property prices are still high given the high land supply. And one reason is that the number of completed units is not quite there yet. Thank you very much. Next, Mr. Peter Shiu. Thank you. We heard about the rising retail indices, and according to the sectors, the figures have been rosy in recent times. However, there is a hidden concern. A few months ago, and the tax rates for a lot of commodities have been lowered, And the lowering of import taxes would help Hong Kong's trade position. But for the retail sector, this might not necessarily be good news. 65% of our retail sector belong to domestic demand, so 35% are hinged upon the external market. And as you know, many of our tourists come from the mainland. So with the tax slashes, the appeal to mainland visitors might be affected, and the impacts would slowly surface. So we would like to see how the FS would help the retail sector. As for the manpower situation, the unemployment dropped to 3% from 3.1%, and there is full employment. And for sectors including wholesale, retail, and catering, they are finding it very hard to hire people. In terms of the import of foreign labor, the Labor Department has been talking about it for a long time, but nothing substantial has been done. And hopefully technology can help streamline our manpower demand. I think it's right to rely on technology. If this is possible, of course, people would do it immediately. But at this point, we cannot see how it would ease our labor demand. As for employment in women, a lot of women are now working. If they do not need to take care of their children, I believe that more women would be working already. But for those who need to take care of their children, if you cannot find a way to help them take care of their children, they cannot go to the women cannot go to work. So I think these require more thought. We should import some labor as necessary to help our economy. This is important. For Singapore, they have a labor population of 3.4 million, and they have 1.15 million foreign or imported workers. How many imported workers do we have? We only imported 4,000 or so last year, so something must be done. Mr. Chen, thank you very much for the reminder and questions from Mr. Xiu. As to how we can help the retail industry, we face a shortage in residential units as well as floor space for retail. With our land sales and new units in recent years, the rentals should be eased in the coming years, and we must improve our appeal to tourists so that we can attract more high-spending tourists, and this would certainly help our retail. And we also need to bolster our own economy and strengthen income. In terms of the import of labor, this was also covered in the policy address. For example, for the care sector, for the SAR government, we saw that there were two major bottlenecks to economic development. One is land supply, and two, labor productivity. And so these are areas we would work on, and we would work with the labor sector without affecting their income or livelihood. We would import labor as appropriate. Chairman, when I addressed Mr. Dennis Kwok's question, I talked about the number of new residential units in the future. In 2018, the expected number would be 19 20.6 thousand, and 2019 there will be 20.7 thousand or 20.7 thousand, and 2020 there will be 20.7 thousand, and in 2021 there will be more than 23,000 units. These forecasts are based on construction works already started or due to start, but that would depend on construction progress as well. These figures show that the number of new residential units will grow at a high pace, and compared with a few years ago, the pace would be much faster. And in the past few years, we once only had a few thousand new units in a year. Mr. Hon Chow, thank you.
Thank you, Mr. Chairman. Thank you, Financial Secretary, for your detailed briefing. Can I ask you a question, please? In the PowerPoint, there's mention of the home purchase affordability ratio. Now, I see for the latest figure, the affordability ratio has gone up to 68%. So that led to some concerns. In the footnote, we see that how this figure is arrived at. It's assumed that the mortgage to loan ratio is still 70%, and for a period of for a mortgage term of 20 years. But if you look at this ratio of 70%, we all know actually the banks have been rather strict with their lending policy. That means for the loan to value ratio is not 70%. Some people may not be able to afford the 30% down payment. They need to get a secondary loan. And I believe that they are paying an even higher mortgage, because now here you say the loan to value ratio is 70%, that's your assumption, but that already accounts for 68% of people's income. And what if they have taken out a second mortgage? Maybe they are paying even more in mortgage out of their income. So for mortgage to income ratio, I think we need to pay attention to that as well. And that also has to do with this. Let's say if someone's mortgage is 68% of his income, and we know banks are rather strict with lending now, and some people may have to take out a second mortgage just to pay the down payment. So we want to help the public to buy their first home. So shouldn't you relax the loan to value, the ratio suitably? As you said, some may be able to afford the mortgage, but they may not be able to afford the down payment. So I'd like the Financial Secretary to tell us what his position is. Second point, many colleagues refer to the tax reform in the U.S. After the U.S. tax reform, it's possible that capital will flow back into the U.S. for various economic activities. And the Financial Secretary said he may not be able to assess the impact now, but you're going to assess the impact later. So how long will it take you to do the assessment and then come up with some measures to address this development? Now, the tax reform has already been passed by the U.S. Parliament, so it's going to go ahead. So I'd like to find out more what you plan to do. Financial Secretary? Thank you, Chairman. Thank you, Mr. Chow. For the impact of the U.S. tax reform, we are going to do a continuous assessment. I think it's mostly to do with the response of U.S. corporations to tax reform. So that's why we need to do a continuous assessment, because there is a dynamic situation. So we'll monitor the developments and we'll see how capital flow may be affected. But I can tell you we're very much alert to this risk. Second point about relaxing the mortgage to loan ratio, the loan to value ratio. In answering Mr. Dennis Kwok's question, I said this is a matter close to our heart. But at the same time, we don't want the market to get the wrong message that with the relaxation of the loan-to-value ratio, this is distorted. This is misrepresented as the government's effort in helping to push property prices up. So, as I said to Mr. Dennis Kwok, we're going to monitor the developments closely, and we'll see whether new measures are needed. On the mortgage affordability ratio, can I invite the government economist, Helen, to say a few words quickly? Thank you, Mr. Chow, for your question. Now, this mortgage payment to income ratio chart is based on a number of assumptions. This is for us to assess the asset bubble risk and also the changes over the past 2 to 3 decades. So that's why we need to make some assumptions. For example, loan to value ratio is 70%, tenure 20 years. So right now the mortgage percentage is just 34. This shows that after the various macroprudential measures have been adopted by the Hong Kong MA, the actual risks are much lower should there be change in the trends in the property market. So we can say, therefore, the macroprudential measures are working. Mr. Alvin Young. Thank you, Mr. Chairman. I'd like to focus on trade with the mainland or the economy of the mainland. Now, there's an optimistic outlook of the mainland economy. I'm not going to question that, but then every economy could face challenges, and the mainland economy is not an exception, especially in the dealing of debts. Now, last year, the Central People's Government has already sent out notice that it's not going to cover the debts of local governments. Let's say if there should be any issues leading to an adjustment of the economy in the mainland, how may that impact on the banking system in Hong Kong? So, or if I could say, ask whether you have any contingency plans should there should be major economic adjustments on the mainland, because Hong Kong and the mainland are so closely related now. And the banking system is also very closely linked. So do you have any contingency plans for, and can you tell the people of Hong Kong that is, if something should happen, we could do this, that, and the other, so in response? Financial Secretary. Thank you, Mr. Chairman. Thank you, Mr. Alvin Yeung, for your questions. On local debts on the mainland, can I invite Helen to say a few words? And then I'll respond to the macro impact, as mentioned by Mr. Young. Yes, government economist. Now, on local debts, the IMF has done some estimates. The total local debts account for about 62% of GDP. This is not particularly high level by international standards. Still, the mainland government has made it a priority task to control risks and there are measures being taken effect. For example, shadow banks. The financing capacity has been substantially reduced. Now, when shadow banks were prospering, the financing capacity accounted for 30% of the total capacity, but now it's just 6% in 2016. So we can see that the mainland government attaches great importance to such risks. And for this year, they are again making a priority to control financial risks and monetary risks. Now, if I may answer Mr. Elvin Young's question, that's a very good question. It points out an important aspect of our day-to-day work. In our day-to-day work, we're in close contact with the Hong Kong Monetary Authority, and we monitor all the figures closely. For banks in Hong Kong making loans to corporations on the mainland, we have a very stringent set of standards. For loans made to large state-owned enterprises and large enterprises, there has to be sufficient collateral. The adequacy of collateral accounts for about 70 to 75% of the loan value, so it's a high level. And even for private enterprises, there has to be substantial collateral before loans are made. So in terms of the lending system, is rather secure. And we can also look at the number of non-performing loans or provisions for non-performing loans. Usually is less than 1%. Very often it's between 0.6 to 0.7 something percent. So you can see again, this is a robust system. Now, do we have any contingency plans or fallback plans? Yes, we monitor the situation continuously. We also have mock exercises. But please understand that it's not appropriate for me to divulge such details here. Next, Mr. Wong Ting Kwong. Thank you, Mr. Chairman. Financial Secretary, I wish you Happy New Year and also, progress in your work. Now, about capital flow directions, changes brought about by technology, and how this could help our economy to grow. We have to consider that. At the same time, there are various risks as well that need to be managed. Now, for one of your priority tasks in 2018, we need to consider that as well. I have just a short question, but please be detailed in your reply. For 2018, what are your priority tasks? Financial Secretary, thank you, Mr. Wong, for your question. In 2018, we have several priorities. First is to control or prevent control financial risks. As Mr. Wong Ting Kwong pointed out, yes, it's true, in the past few years, the global and local economy has been doing well. The outlook is positive. At the same time, though, we have to guard against risks, financial risks in particular. In reply to Mr. Elvin Young's question, I've already explained in detail this aspect of consideration. And the other point is how to promote diversity in our economic development. Now, the Chief Executive mentioned in her policy address that we have to, of course, support our traditional pillar industries. But at the same time, in terms of creative industries and new technology, we have to support such developments as well. So in the coming year, one of our priorities is to promote diversity, economic development, and high-value added development. Technology could straddle many different sectors. Technology could help to enhance the competitiveness of different sectors. And there are other industries where we have an advantage, and then we could take a targeted approach in promoting the development of these industries. Artificial intelligence, fintech, smart cities, and healthcare technology, especially geronal technology. These are the aspects we will focus on. The government have relevant policy initiatives to support such development. We also provide financial incentives. And then we also have to guard against various risks such as capital flow, as I mentioned earlier. That's the second aspect of our work. Our third priority. Now, the Bay Area Development, Belt and Road Initiative, and the 13th Five-Year National Plan. Hong Kong plays an important role in all such developments. So how could we leverage on our advantage so that we could benefit from these developments? At the same time, we could reinforce our advantage so that, or consolidate our advantage so that in terms of regional and national development, we could continue to take the lead in industries where we have an advantage. And then we could promote development in Hong Kong and benefit the public here. At the same time, we could serve the needs of national development. Thank you. Mr. Wu Chi-wai. Thank you, Mr. Chairman. Mortgage payment to income ratio that's gone up further. Colleagues refer to the loan to value ratio. I'd like to make a point here. If we just deal with loan to value ratio with rising property prices, well, that's concern if we try to help people to buy homes this way. That was a real problem in Japan when property prices were at an astronomical high. Several generations had to chip in to help the younger generation buy properties, and so we have to guard against that. So what I'm saying that if we just trying to adjust the loan to value ratio to help people buy homes, I don't think that's an effective way. That's the first point. Secondly, about housing supply. Well, housing supply has been at a high level for the past year or two, but property prices continue to escalate, and the mortgage payment to income ratio continue to rise, and that may mean two things. One, for those who could afford it, they would have bought their homes already. So for those remaining, they are the ones who have relatively greater difficulties in affording a home. So that could be the first point. Second point, there could be other demands. That's why property prices continue to escalate. Otherwise, it doesn't make sense because supply keeps increasing. For the past 2 years, every year we have some 20,000 private housing units in the market. So my question is, Financial Secretary, how do you interpret this phenomenon? So is it possible that there are strong investment demands in the market, squeezing out the real housing needs? So for those with real housing needs, they have to face high property prices, and because of housing needs, they don't. They just buy flats at a high price, and they get themselves in trouble. So how do you view this development? And what about house investment needs, especially overseas house investment needs? Would you do something about it? Because in major economies, they have various measures to deal with overseas investment. For example, restrictions on the buying of properties, or if there's a capital inflow leading to an exuberant property market, there are various measures to control that. So what are your views? Thank you.
Mr. Chan, thank you very much for the question. in terms of supply, as we said, there are two key aspects. One is the bulk of the first-hand supply in the next 3 to 4 years would be pre-sold units, and the supply is rather high. And in 2016, there were about 64,000, and as of September last year, there were more than 90,000. So the increase was almost 50%. However, the public is yet to feel the increase in supply because it takes time for the units to be sold. I quoted figures from last year and this, and next year the forecast is about 20,000 units, and I won't repeat those numbers. So with the new supply, the public might have a different impression, and the reason is that they can actually move into the new flats and they can vacate their original flats. So the supply would be more relevant to them. And in terms of managing demand, especially the purchase of Hong Kong properties by foreign buyers, something must be done. So that was our objective when we introduced the buyer's stamp duty. After introducing the BSD, the ratio of non-Hong Kong resident buyers dropped substantially, and we have been monitoring the situation. After introducing the BSD, we could see that it has been effective, and after implementing double stamp duty, the purchase of flats for investment was also suppressed, and the ratio of such purchases dropped from 26% to about 15 or 16%. I do not want to comment on the government measures. No matter how I say it, my messages could be skewed easily. For example, if I announce the measures against buyers from outside Hong Kong, some people might actually encourage purchases in the short term, which would drive up the property prices further. So we would not say what we intend to do, but we are monitoring the situation. Thank you very much, Vice Chairman Mr. Christopher Cheung. Thank you. Mr. Chan, equity investors feel that you have a lucky charm. Entering 2018, we have reached a new high in our market, and we have seen 9 days of increase, and the stock market and property market are both rosy. And the uncertainties in the political environment have somewhat eased, even with the constant U.S. interest rate hikes. The pace has dropped somewhat. And what is the Financial Secretary's outlook on our economy, including share market? Would you be more optimistic? And as other members have pointed out, the public is very concerned about home purchase. So what is the Financial Secretary's outlook on the property market this year? With the U.S. interest rate hikes, they fail to affect the exuberant property market. And in the policy address last year, Mrs. Carrie Lam proposed a starter home scheme, and the mortgage payment to income ratio would be relaxed for those for properties worth less than $4.5 million, and Mr. Norman Chen seemed to have changed his line. And will the government relax the mortgage to income ratio for properties below 4.5 million? And if so, would it conflict your measures to dampen property prices? Thank you very much. You talked about the mortgage ratio and the property market. And we have elaborated on the risks of the property market, so I won't repeat them now. We expect interest rate hikes in the coming future. Of course, it's hard to predict the timing and extent, so it would depend on the pace of the U.S. interest rate hikes and the flow of capital. And this would certainly affect the asset markets, including the share and property markets, and there would be a pressure on supply. And in terms of the mortgage ratio, I won't repeat what I've already said. As for the stock market, as a public officer, I would not comment on our stock market outlook for this year. But as an officer responsible for financial matters, we have to maintain market order and we have to control risks. In the past year, with the SFC, HAMA, and stock exchange, we had very frequent meetings, and we met almost every 2 weeks to monitor the situation. Apart from monitoring various indices and transaction volumes, I would also pay attention to the derivatives market and the short selling position. So we can see that the market is functioning properly and in an orderly manner. So asset markets would not always go up. Even with an upward trend, there would be adjustments from time to time. So we would like to remind investors to assess risks and gauge their own abilities. So we are almost 30 minutes behind schedule. So the Financial Secretary and his team will remain for the next item. Mr. Chen, we still have an hour of this, so why don't we take a 3-minute break? And we would invite the team from the FSTB to come in again, and we will resume after 3 minutes.